Hi there all, Sebron here again, and today I just wanted to talk about mortgages and how much you'll be paying back to the banks or your lenders on a monthly basis. As a mortgage takes place, typically they're like products you pick up from a shelf. Each mortgage or lender will have different obligations within the mortgage, whether it is a 2-year fixed rate, a 2-year variable rate, a 5-year fix, all dependent on what product you choose. Now, mortgages are the greatest thing ever because we can leverage our property and our assets so people pay it off over time. But we always need to make sure that the numbers work in the property we are investing in and making sure that it covers itself and gives us positive cash flow. This then means that we're going to need a good mortgage rate. We're going to need to get in contact with different brokers and find what product suits our position best. Now, we just want to make sure that we understand there are different types of mortgages as well, in terms of interest only and repayment mortgages. Now, most people will take out a repayment mortgage because they want to own the property at the end, so they'll slowly pay off the principal as well as the interest over the years. But whereas most investors will use interest only, because what this means is they'll just pay for the money borrowed with no regard of ever paying that money back. In essence, they will just keep refinancing, pulling money off the property to purchase more property. Now, it is vital that we understand if the property is going to pay for itself, is it going to give us positive cash flow? So we need to work out if it will. Now, there is a formula in which mortgage advisors use to work out if you or a business will be able to pay back the mortgage interest. Now, I thought in today's video it would be quite important to go over the equation so anyone can get an understanding of how much it would cost them to take out a mortgage. So this equation is used to calculate if the monthly rent roll will cover the annual interest on the remortgage. Now, let's go through it. We have a property here which we refinance for £150,000. Now, we'll be getting a 75% loan to value on the mortgage, so we need to work out 75% of 150, so it's 112,500. Now, that is the amount of money we will be borrowing, so we need to pay interest on that amount, but we need to find out how much that is. Now, we do need to understand that this equation may change varying on the person, whether you're a lower rate taxpayer, higher rate, or a limited company. Now, we're going to be running this stress test at 5.5%. Now, this can seem high, but we must understand that this is the worst case scenario that someone would have to pay on their mortgage, so it's good to understand the baseline of what they might pay. So the interest rate we'll be using on the stress test is 5.5%, and we're going to be timesing that by the amount we are borrowing, which is 112,500. This in return gives us our annual interest of 618,750. So this stress test is designed for a company or a lower rate taxpayer. This means that we're going to have to times this value here, 618,750, by 125%. This would equal 773437. Now, this is the baseline our property has to make on rental in a 1 year. Now, divide that number by 12, which would equal 64453, and that is the baseline monthly rental you would have to receive on your property to take out a refinancing of 112,500 within a limited company, or if you're a lower tax rate payer. Now, I hope that makes sense. It's much easier to get your head around once you've done it a few times. But just remember the different variables. You've got the interest rate here. Now this is a stress test, so this is the worst possible scenario. I think the normal mortgage rate now is 4% roughly. Remember, if you're paying in a limited company or you're a lower rate taxpayer, then you will be paying 125% of the annual interest. But if you're a higher rate taxpayer, that number does change to 145. Remember that. But if you're running a stress test, you could just run it all at 150%. There would be no problems with that. Now this is the baseline number we need to make that refinance work. Cheers guys, see you on the next.